This is a low probability head and shoulders chart pattern, and this is a high probability head and shoulders chart pattern. Do you want to try making a guess which is which and why? Well, a quick hint for you. Observe the structure within the structure. In my previous video, I explained the concept of the structure within the structure of an ascending triangle. And it's the same thing here, except that it's applied to a head and shoulders chart pattern. If you are new to the channel, first and foremost, welcome. We create many Forex trading tutorial videos like this, so definitely hit that subscribe button because we release new videos every single week. Now, if you have not watched that video and do not yet understand the concept of structure within a structure, don't worry because I will do a quick refresher in this video as well. The concept of structure within a structure deals with being meticulous and zooming into the nuances of a chart pattern. In my previous videos, I explained how to do this for an ascending and descending triangle. So I will leave a link to that video in the top right corner right here and at the end screen of this video. Now, for you to understand how to further break down a chart pattern, you have to first understand what a head and shoulders pattern and an engulfing candlestick pattern looks like. This is foundational to the concept, so let me quickly run it through with you because I don't want to assume that you already know this. So this is what a head and shoulders pattern looks like. It consists of a left shoulder, a head, and a right shoulder. Just like what a human being looks like. The opposite of a head and shoulder is an inverted head and shoulders pattern, which is a bullish reversal pattern. This is an example of an engulfing candlestick, and as the name suggests, the second candle engulfs the previous candlestick. Now, the price doesn't need to close above or below the entire range of the previous candle, but if it does, it's better. The price just needs to close above or below the body of the previous candle in order for it to be counted as an engulfing candle. Before I move on and show you how to apply engulfing patterns with the concept of structure within a structure, please do me a small favor and hit that thumbs up button. It helps support the channel and I would really appreciate it. Videos like this take a lot of time to create, so I definitely appreciate your support. You can also join our free Telegram group where we send out signals daily, and you can find the link to that in the description down below. So earlier I showed you this low probability head and shoulders chart pattern. Now, if you take the time to be meticulous and study the structure within this pattern, you will see that there is not much selling pressure at the left shoulder, head, or right shoulder. At each of these points, price slowly retraces rather than bounce off the level in an aggressive manner. In this case, we can also see that this head and shoulders pattern eventually fails as price does a false break of the neckline right here. Now contrast this with this high probability head and shoulders pattern right here. We see that price made a nice bearish engulfing pattern at the left shoulder, another one at the head, and another one at the right shoulder. At each of the 3 points, there was strong bearish pressure. Just look at how price started selling off from that level. This is what I refer to as breaking down the structure within the structure. It's taking the time to really zoom in into the structure of the chart pattern rather than simply identifying the chart pattern at a glance. Look what happens to the price after the neckline is broken. Price then proceeded to sell off heavily, and this was a good trade setup. On this channel, we do teach you how to catch a trade at the right shoulder as well. But in this case, even if you traded the break of the neckline, you can see that it is still a good trade. This is the power of being able to identify which kind of head and shoulders are high probability. At a glance, both chart patterns that I showed you earlier look similar. They are both valid head and shoulders pattern. But the microstructure that makes up the pattern is different. And watching for engulfing candles at each of the 3 pointers is how we discern between a high probability setup and a low probability one. This is what most traders miss out on, and hence why they say that chart patterns don't work. They lacked the experience to discern between a high probability chart pattern and a low probability chart pattern. Probably because they learned about it online and most websites only show you the generic chart pattern. They do not go into the specifics of analyzing the structure within a structure as what I have just shown you. That's a good reason why you should hit that subscribe button if you haven't already done so. Now quickly, I want to show you another high probability head and shoulders chart pattern. This time applying the concept of structure within a structure to an inverted head and shoulders pattern, which is essentially the opposite of a head and shoulders pattern. So right here, we have an inverted head and shoulders. This is the left shoulder, the head, and here's the right shoulder. Before I proceed, I would like you to pause the video and try to see if you can break down why this is a high probability inverted head and shoulders pattern. Let's begin at the left shoulder. We see a nice bullish engulfing candle. Remember, if an engulfing candle closes above the entire candle's range, that's even more powerful and a plus point. At the head right here, we also see a nice bullish engulfing candle. Just observe how price rallied impulsively right here. This tells us that there is a lot of strength in this move. Price only stayed at the level for a short time before reversing sharply. This is what we want to see. Lastly, we have the right shoulder here. Again, we see another bullish engulfing candle and price starts rallying. This is the anatomy of a high probability inverted head and shoulders pattern. Now watch what happens to this currency pair after the price breaks the neckline. Again, this is a good setup. Once you train your eyes to focus on identifying engulfing patterns in the context of a chart pattern, it will come naturally to you. You will be able to effortlessly discern between a high probability setup and a low probability setup. You might find it hard at the start, but believe me, it gets really easy and is definitely worth mastering. Understanding this concept will help you avoid low probability chart patterns. If you are a little more advanced, you can also apply this concept and trade in the other direction. Essentially, when you see a low probability chart pattern, you can view the neckline as a false breakout setup. Anyhow, that's more advanced stuff, but if you'd like me to cover more on that, do leave a comment down below to let me know. But if you are a beginner, I suggest applying the concept of structure within a structure to the ascending and descending triangle chart pattern, which I briefly touched upon at the start of this video. Those are trend continuation patterns and are much easier to trade. So summing up this video, the way to differentiate between a low probability and high probability chart pattern is to look for price action at each point of the chart pattern. The head and shoulder pattern has 3 distinct points: the left shoulder, the head, and the right shoulder. Specifically, we are looking for an engulfing pattern at each of the 3 points, and we want to see price bounce off the level aggressively. That's our clue that the chart pattern is high probability. And that's it for this video. I hope you got a ton of value. As promised, I will leave a link to the ascending and descending triangle video right here at the end screen. If you enjoyed this video, make sure to check that video out next, because an ascending triangle is a trend continuation play, and that means it is easier to execute compared to a head and shoulders pattern, which is essentially a trend reversal play. Thanks for watching, and don't forget to subscribe. I'll catch you in the next video.